It is time for September seasonality. This is just an opportunity for us to take a look at some of the things that have happened in the past. Not to say that they are going to happen again this September, but at least it gives you an idea of maybe some things to look for. I always use seasonality as a confirming type of an indicator. I don't use it as a primary indicator. So I would not look at this and say, oh, the S&P normally does this, so therefore I'm going to just follow it. Or a stock normally goes up 6% on average in September, so therefore I'm going to buy it until it goes up 6%. That probably would not be a great strategy to use. Instead, if you have a stock that typically has strong September seasonality and you happen to see a technical breakout, then that strong seasonality would then add or confirm that bullishness that I'm seeing on the chart. That's how I use seasonality. But with that, let's go ahead and take a look at some of what's been going on or what has happened in September's past. So I'm going to start here. You can see the S&P 500. Now, this just goes back 20 years. I have a spreadsheet that goes back 70. So I'm just going to start you off here, and you can kind of look at this. But you can see over the last 20 years, September has averaged going down 1%. But one thing that's important to note is that September goes up 53% of the time over the last 20 years. So it's about a 50-50 deal. And if we scroll this back to the last 3 years, September's been up every year. It's one of 6 months that's been up every year. So again, don't take this as some sort of a guarantee that we're going to see weakness during the month of September. It has a tendency to go down in the month of September, but it doesn't mean that we're going to go down. All right, a few things I just want to point out about the major indices before we look at some of the industry groups and the sectors and individual stocks. First, the S&P 500 has gone up 31 times and down 37 times. Up 31, down 37 times in September since 1950. So there is a little bit of a bias over the last 70 years for September to end lower than it starts. It has averaged producing a annualized return of minus 5.58% during the month of September since 1950. So that's every September's trading days back since 1950. The annualized return is minus 5.58%, which is the worst month of the year. It's the 12th out of the 12 calendar months. You might say, well, minus 5.58% is not that big a deal. Well, it is kind of a big deal when you consider that the S&P 500 normally throughout the year goes up on average 9% a year since 1950. So we're talking about 14.5 percentage points of underperformance. That is pretty significant, especially when you consider going back 70 years. NASDAQ has gone up 27 times, down 21 times, with an annualized return, though, of minus 6.34%. It does rank 12th out of the 12 months. Russell 2000 small caps, and by the way, NASDAQ was since 1971. Russell 2000 since 1987 has gone up 19 times, down 12, and it has an annualized return, average annualized return of minus 1.65%, which ranks 10th of the 12 months. So you can see that it has the tendency to not be a very good month. I still would pay attention to the technicals. I would still pay attention to what's leading. If we break out and all of a sudden we're seeing money rotating back into the aggressive areas, I certainly would not be betting against a 10-year bull market. But again, seasonality is one factor to consider, and I want to give you the numbers. Now, some notable periods within the month of September. We tend to start off pretty strong. On the S&P 500, August 31st to September 3rd results in 31.05% annualized return. The bad news is that August 31st, September 1st, and September 2nd fall on Saturday, Sunday, and Monday this year, Labor Day Monday. So the good news is those 4 days generally produce some pretty good results. The bad news is they're all falling on either weekend or holiday this year, except for September 3rd, which is Tuesday. September 20th to the 26th on the S&P 500, it's a bad period. And that's right around when options expire. I think this year they will expire on the Actually, I think they expire on the 20th. I think that Friday is the 6th, so the third Friday would be the 20th. So I think you want to be careful. Maybe mark your calendar. That historically is a bad week. The S&P 500 has an annual or an average annualized return of minus 39.41% during that week, and that is going to fall right after options expire. So again, I would have that marked on my calendar. If I had some really good profits going in there, or maybe the S&P is hitting a major resistance level, or worse yet, it might be breaking down, just keep in mind that that following week tends to be very, very weak. All right, Russell 2000 wanted to point out that the September 11th to September 16th period since 1987 has produced annualized returns of 50.66%. So right in the middle of September, there tends to be a sweet spot for small caps. Might want to keep that in mind. And also NASDAQ starts off the month of September pretty strong, but it's really just the first couple of days, which again are weekends and holidays. So not sure how much we can take out of that to start September. We shall see. All right, let's talk a little bit about the sectors that lead. So I'm going to go ahead and change this now for you. Let's take a look at the XLU. XLU, now, again, we know that September tends to be weak. So when you look at September, you say, well, it's only up 0.1% on average. That's not very good. Well, it's not until you compare it to the S&P 500. And when you compare it to the S&P 500, what you will see is that the XLU only goes up 37% of the months of September relative to the S&P 500, but the average outperformance is 1.1%, which tells me if it's only happening 37% of the time and yet there's still a lot of outperformance, it's telling me that when we do have those years where September produces a strong month for utilities, it's a really strong month for utilities, which means it's a really bad market generally for equities. And that's what we have to be careful about, is knowing historically that September can be rough. Not every September, but periodically we do get some pretty rough Septembers. All right, let's take a look at another group that tends to do very well, and that is consumer staples, another defensive group. Of course they do well because it's a defensive month. It's when the market tends to do look for more leadership from defense. Here you can see 53% of the time it goes up, no big deal. And again, only 0.3%. But that's pretty good when you compare it to the S&P 500, because the S&P 500, as I showed you on that first chart, seasonality chart, it averages going down 1% in the month of September. So if you're in some of these other areas where you're actually producing gains, and here over the last 20 years, you can see that the XLP relative to the S&P 500 goes up almost 60% of September's and averages outperforming by 1.3%. And when you look across all of these numbers, that is the strongest period for the consumer staple group on a relative basis. So a couple of things I think that are very interesting to keep in mind. Now, what tends to lag a little bit? Well, XLB, if I pull that up relative to the S&P 500, you can see materials only outperform 42% of the time, and the average underperformance, 1.4%. And when you go across the year, that's easily the worst month of the year for materials. Materials, in my opinion, outside of the recent surge in gold, I think overall the long-term downtrend in the XLB relative to the S&P 500 remains perfectly intact. So knowing that we're going into the worst month of the year doesn't make me feel any better about a group that's already been showing a lot of lagging on a relative basis. All right, technology. You would think that if the market is not so great in September, that some of the aggressive groups would be a little weak. Well, technology does beat the S&P 53% of the time, so it's about a 50-50 call. But when you look at the relative strength, you can see that September is the second worst month of the year for technology relative to the S&P. December is the only worst, and you can see that's a pretty low number in terms of the XLK actually beating. This is one of those sector stats that I always found somewhat interesting, that technology, because December generally is a pretty good month, but for whatever reason, doesn't see leadership from technology very often. Okay, let's keep moving. So those were the sectors. Now, as far as some of the industry groups, just talked about the fact that, you know, some of the aggressive markets or aggressive areas of the market tend to not do so well during September. But if I pull up internet stocks and we go back over the last 20 years, September, October is really when this group gets going, gaining 3.4% in September and 8.7% in October. And look at those percentages. I mean, that's pretty high percentage chance that this group is going to end the month higher. And when we pull it up relative to the S&P, I think it's really impressive numbers. Look at how September and October really just stand out from the rest of the year. And look at that relative outperformance. That's pretty impressive going back the last 2 decades. So internet stocks, if you see internet stocks starting to rally, individual stocks within that group like Twitter, that's a group, or that's a stock I really like right now. Those are the ones that I would be paying attention to because, again, based on seasonality, this is an indication that could confirm a bullish move by these companies or by this industry group. All right, footwear. Another group that really likes September. We'll talk about Nike in a little bit. Going back the last 20 years, if that doesn't stand out on the chart, I don't know what does. Over the last 20 years, footwear has outperformed the S&P 500 almost 4 out of 5 years. So instead of, 4 out of 5 dentists recommend? Well, here, 4 out of 5 Septembers suggest that you want to be in footwear. Average outperformance 4.2% over the S&P 500 during the past 2 decades. Another one that you'll find interesting is gold. I mentioned material is not very good, in September, but gold on a relative basis does tend to perform pretty well in September. Not only do we still have a pretty nice looking chart on gold and many gold stocks, but gold tends to benefit when the market's fearful. And so if the S&P 500 tends to go down in September, it would make sense that gold has a tendency to do pretty well in September. And you can see on a relative basis, it's one of the best months in terms of the odds of outperforming the S&P. And then also down here at the bottom, when we talk about relative outperformance, the only months that are better are January and August, and August is another fearful kind of a month. August, September, the 2 months that I would be most fearful looking at history. And these 2 tend to be pretty good months. And of course, we are enjoying a good August in gold. And so right now, it certainly appears poised to continue that, and seasonality supports that. All right, areas maybe that we want to be a little careful of in the month of September. Well, I would certainly say semiconductors. And I'll go over some individual semiconductor charts that I think you'll be interested to see as well. But over the last 20 years, when you look at semiconductors relative to the S&P 500, there are only 3 months that show negative performance on a relative basis. June, September, and December. June minus 1.2%, December minus 1.1%, September minus 3.3%. That is some serious underperformance in the month of September. Again, I'm going to follow the technicals more so than the seasonality, but if you start to see the group underperforming or breaking down, keep in mind September, that's normal. That's a normal type of behavior for this group in September. How about truckers? And you can see it's about 50-50, but on a relative basis to the S&P 500, the group has underperformed by an average of 2.6% in the month of September, 2.2% in August. So a lot of underperformance there, and it even carries all the way over into October. minus 4.3%. So this is a pretty tough period of the year for truckers. All right. How about steel? We talked about materials. And one of the reasons why material struggles, when you look at steel, only goes up versus the S&P 42% of September's, and the average return, look at August and September back to back, minus 7%. No other month of the year is even close to these two. So we are just not in a good time historically for steel stocks. All right, let's talk about some individual stocks. And I'm going to save those 6 stocks for just a few minutes from now. I'm going to go over the 6 stocks, give you my thoughts, that the 6 that are in the poll. Those are 6 stocks that tend to do really well in the month of September, tend to perform well despite all of the, down currents that we tend to experience during the month of September. But before I get into those, I want to just go over a couple of others that I did not put on the list. So let's first take a look at Apple. A few of you may have heard this company before. During the month of September, it only goes up about 50% of the time versus the S&P 500. And in terms of relative performance, September and December are the only 2 negative months for Apple. December's the worst, September's second worst. And again, you can see that 32% showing up. I don't know, again, why technology is so weak in December, but many of the areas are really, they tend to perform poorly. All right, so that is Apple. Now, I just talked about the semiconductors. How about Intel? Well, first thing I want to point out is the last 5 years, Intel's been pretty strong. But when you go back the last 20, it has not been so strong. So that tells me if I take out these last 5 years, go this way with then you're looking at prior to the last 5 years. Yes, the last 5 years have been good. Are we going to revert back to what we had in the prior 15? Because Intel only went up 27% of the time relative to the S&P 500. So 1 out of 4 years, and averaged underperforming by 6 percentage points. That's a lot for a big company to average over a 15-year period. But again, we tack on those last 5 years, and that brings that down. And if you have a short-term memory and only want to look at the last 5 years, you might say, hey, Intel's a great performer in the month of September. So it really is based on your perspective with a lot of these. I can draw some of these out to 20 years. You can make anything fit. I can say, well, those 10 years or these 14 years, this happened. But I think the more data you have, generally speaking, the better the information is. And so I think going back over 20 years is much more educational and informational than going back 5. All right, AMD. While we've got semiconductors, AMD last 20 years relative to the S&P 500, September and October are really bad. Percentage, in terms of how often. Now, also keep in mind, Advanced Micro Devices wasn't really a great performing stock long term. It would have great periods. It would go up, then it would come back down. Then it would go up, come back down. It's really only been the last few years that we've seen Advanced Micro Devices really begin to make headway into its competition, Intel. So I'm not sure how much we want to pay attention to this, but at least be aware of it, that September and October have been pretty bad months. I mean, if we draw this back, even the last 5 years, we just showed how strong Intel was. September and October. September only has gone up 25% of the time, but the average gain was 2.4. Obviously, it had one really good September. And October's been very weak, minus 7.2%. So even the last 5 years haven't been great for AMD. All right, one more semi I wanted to give you, and that is Microchip. Go back 20 years, Microchip goes up less than 50% of the time relative to the S&P, and it averages going down 3.7 percentage points further than the S&P. So all of these I've been giving you are versus the S&P. So if I take out the S&P, you're going to see that this is really bad. So it was minus 3.7 relative to the S&P. It's minus 4.7 just on its own on an absolute basis, because remember, the S&P 500 had a minus 1.0% over the last 20 years. It averages going down 1%. All right, another stock. Now, this is not in the semi space, and then I'm going to go over the poll stocks. But I wanted to go over Booking, formerly Priceline. And you can see last 5 years, not too bad here for September. But when we go back 20, averages going down 7.8% during the month of September. And really, this is one of those crazy seasonality charts where Priceline tends to do have all its strength in the first half of the year. These numbers are outrageous, and look at the percentage chance they go higher. This is over a 20-year period. And then you get into the second half of the year, and it's negative. I think the first half of the year average is going up like 32%. I haven't gone back and added these up, but it's 30, 32, 34, I don't know, something like that. And then you get into the second half of the year, and if you add these across, you come up with a negative. That is just wild to me that over 20 years, a company could trade so differently between its first half and second half of the year. But Booking does, and you really want to be careful. If it begins to break down, just keep in mind September, that would be a normal type of an event for Booking. Okay, we are now going to pull up the poll stocks, and I'm going to bring them up here on the seasonality first, and then I'll pull up the charts, give you kind of my take a little bit, then we'll go see what Aaron has to say about the stocks. Facebook. Now, keep in mind, there's only 8 years. Facebook's only been public for 8 years. September, though, 6.1% is worth noting. Averaging, gaining 6.1%, almost 3 out of 4 years, it goes higher. So Facebook's got certainly a tendency to move higher in the month of September. Next up, CME. I'm just doing them in order that they were listed in the poll. All right, next, you can see CME over the last 18 years. It goes up roughly 2 out of 3 years, average 5.6%. Now, this is not versus the S&P. This is just strictly on an absolute basis. CME averages going up 5.6% during the month of September over the last 18 years. Baidu, not been one of my favorite stocks, but last 15 years, Baidu's average is going up 4.5% in September. And really, when you look at it, another 5%, 5.5% in October. So Baidu tends to show seasonal strength. Alphabet or Google. September averages 5%. October averages 10%. Look at the percentages. Almost 3 out of every 4 years, you're going to see Google move higher in September, and same percentage for October. And don't forget, I just mentioned internet stocks tend to do really well. So Google might be a stock to keep an eye on if the internet stocks start to move, because this is one that tends to get swept up to the upside in the historical current. Next up, Alta. I will mention Alta reports its earnings after the bell today. Of course, that won't affect its September seasonality. That will be included in August. But if they do come out with good numbers, look at this chart. This is one of those wow charts. So last 13 years, 91%. So I guess that's 12 out of 13. Alta's gone up, and the average is 14%. That was kind of a shocker. So Alta looks good. If they come out with good numbers, raise guidance as we're heading into September, might not be a bad choice. And then the last one, Nike. Talked about footwear earlier and how footwear loves the month of September. Nike maybe it's back to school. Maybe that's the reason for it. But last 20 years, about 3 out of every 4 years, we go higher with Nike. And the average gain during the month of September, 5%. It's its best month of the year. So those are the stocks. Now I want to pull up the charts on these. And I'm going to just go through very quickly, so I can give Aaron a couple minutes to respond as well. But I see Facebook coming down, starting to break above the 20-day moving average. If it could continue that, that would certainly be a positive. But I want to see whether or not we make that breakout. On a relative basis, it is in that internet space. but it's not showing relative strength to its group right now. So if that were to turn back up, we get the break above the 20, then Facebook would start looking up. Right now, I'm not quite convinced. So that is not going to be my choice. CME is part of the investment services group, and the stock is one of the leaders in the group. It is still looking very good technically, breaking out above the 20-day moving average. And we know seasonality helps the stock. So CME is certainly one to consider. Not going to give away my winner just yet. Baidu, forget about it. I don't like the chart. It's starting to show a little bit of strength with this move. I'd have to at least see this breakout above about 113, 114. The relative weakness in this stock versus internet would keep me out of it for right now. Google did have the big gap up with its earnings. Big surprise there. Came down, double bottom, near gap support. I think if we can get this breakout above 1210, I think Google will start to look really good. And you can see the relative strength versus internet has been picking up for the last maybe 5-6 weeks. So Google, I think, is one to consider. Alta, I wish we were picking tomorrow, because if Alta comes through with a good earnings report, this would probably be my pick. I like the way this stock is trading relative to the specialty retailers. I think the specialty retailers are starting to turn back up, breaking this trend line. If I just knew what was going on with their earnings, but because they have relative strength, I think their earnings are going to be pretty good. I think right now they're consolidating after a strong move to the upside. I like this base that's forming, knowing that Alta is still holding on to support and loves the month of September. That is, well, I'm not going to give it away yet. Nike, last one. Nike breaking back up above the recent highs. I like that. I like getting back up above the 50-day moving average. It is one of the leaders, 52-week high versus footwear, and footwear starting to strengthen again. So Nike would be an interesting pick. I'm going to go out on a limb here, and I'm going Alta. Even with their earnings, I can't pass up that average 14%. It is one of the leaders in the specialty retail space. So that's what I'm going with. Here is your seasonality summary. And now if you would like to take
Yes, I will take the screen and give you a little bit of my thoughts on this. And I thought it was very interesting because Nike actually was on my radar yesterday. I did make a couple of purchases, but I did sell quite a bit yesterday. And Nike was one of the selections that I almost bought yesterday. So I really do like the Nike chart. I like that ascending triangle really that's formed here. Look at, you've got the PMO buy signal going on. I really like Nike, but I had to go with CME because it's been in my portfolio now for a couple of months. Back here, I think in late May, somewhere in there is when I bought it. So I'm pretty happy with it, obviously. But I'm looking for it to break out. It is an ascending triangle coming on here, I would say. So I would be looking for that breakout to the upside as well. So I like both of those two, but I can't argue with Ulta. I think that looks great as well. Just looking at how my PMO is set up and that nice little breakout, possible double bottom. I mean, I think all of these look pretty good going into September, but my favorite would probably be Nike with a close runner-up of CME.
All right, let's see what the audience thinks. See if they agree with us.
Yes.
Nike, you got the winner.
Hey. Yeah, but Ulta's there in CME. So really, I think everybody kind of agreed with this. Baidu, yeah, that's, I don't like that chart really that much right now, but.
Yeah, it's just got a lot. It's got some proving to do to me. I mean, it's in a good space, the internet space, as we go forward, but it's one of the weakest. And so I'm just not a fan of buying into relative weakness. I just don't think that's a good strategy. And so I personally would avoid Baidu among these 6. I like the other 5 better.
Yep.